Hi, all, and welcome to the Capital Link Alternative Finance panel. We have quite an interesting group of panelists, and I think we're going to have a really great discussion today. So I would like to start off because we have a lot of ground I'd like to cover. So I guess the first thing I'd like to do is to hear from each of our panelists, describe the platform, the types of services and products your platform offers, and maybe a little bit of strategy that your platform tries to employ. So why don't we start with Ole first, please?
Absolutely, and thank you for inviting me to the panel. These are, as the Chinese word is, may you live in interesting times, and I guess we're in the middle of it right now. I run SFL Corporation. It's a ship owning company. We own, nearly 90 vessels and also, some drilling rigs. Generally, very long-term charters. We have a backlog of $3.6 billion fixed rate. Plus, we also have some vessels in the spot market. Been in the business now for 16 plus years and have the distinction of being the only shipping company, I would think, in the world right now that's been both consistently profitable every quarter and paid dividend every quarter over this prolonged period. So we stood firm through the financial turmoils in 2009. We stood firm through the tanker crisis in 2011 and the offshore crisis in 2016. Fingers crossed, we will do our best also in the market that we see right now.
Great, thank you. That's an optimistic opening. So maybe we can turn to Nicolas now and get an idea of the work that you do.
Yes, we represent Fearnley Securities. We're a maritime and energy focused investment bank with offices in Oslo, New York. We've raised roughly $10 billion over the last 4 years or so to the maritime industry. I represent the asset-backed finance team, which has basically 6 staff across 3 different offices. We have some people in Hong Kong and Tokyo as well. And what we do is we primarily focus on, the growing demand for alternative finance products, such as lease financing, direct lending, etc. We have capital providers across the globe. We work with people like Hans and Ole and talk to them on a regular basis. But we also source a lot of our capital in Japan and China. We see the space as infinitely interesting because demand is growing day by day. There's a more and more limited number of companies that can access traditional bank debt. So we think these are interesting times, and we've been busy. We raised about $650 million of capital, asset-backed finance capital last year, and we aim to do at least that this year as well.
Great. Okay, thank you. Robbert, Jan, why don't you tell us a little bit about direct ship finance?
Yes, pleased to do so. With direct ship finance, we offer plain vanilla bank-style senior secured financing. We aim to launch with a $400 million fund with committed institutional capital in Q2. Our main focus is on what I would say European and US-based shipping companies, privately owned, family owned, with a fleet of somewhere between 5 and 25 vessels. Our focus is very much on what we call liquid assets, meaning dry bulk, crude, product, chemicals, LPG, and containers. If we look at if you look at the typical shipping client for direct ship finance, it is, like I said, privately owned, family owned. We value very much what we call integrated ship owners, meaning owners that are directly involved in either commercial management and or ship management. In other words, being active in the market. where do we differ from other alternative lenders and especially the traditional shipping banks? It's probably our underwriting methodology. We focus very much on the earning capacity of the underlying assets, a little bit more than on loan to value. And within that framework, we can have flexibility. In a high market, we can do higher leverage loans, in most cases with a front-loaded repayment schedule, but at the same time, in a low market, and maybe we are heading for that today, we can look at, and to support anti-cyclical financing, we can look at backloaded repayment schedules, basically to support the cash flow in the early days, if needed. We have a team with direct ship finance. We have a team with experienced people with a track record in shipping and in ship finance, and we understand the dynamics and the cyclicality and sometimes the volatility of shipping, and we make sure that this is reflected in a direct ship finance structure.
Okay, great, thank you. Hans, we've done this panel before, but why don't you give us a little bit of information on Sougé shipping?
Hi, Amanda. Happy to be with you again. Solar Shipping has for the last 15 years been doing sale-leasebacks on bareboat basis. So this is our specialty, and we stick to our formula. Today we have 35 vessels, primarily tankers, but we also have LPG vessels and cement carriers and chemical tankers and some open hatch vessels. We currently have an EBITDA, contracted EBITDA of 570 million. We've recently raised a new fund, so with $150 million. Initially, we will hopefully close at about $225 to $250 million end of this year, Corona allowing us to come back to market. But essentially, we have funds to invest and are willing to do sale-leasebacks in all sectors. Our primary targets are industrial ship owners who would like to refinance their vessels. So we're keen to do business and work closely with our clients, partners.
Great. Good to hear that people are still interested in doing business, especially in these uncertain times. And that brings us to George from YieldStreet Marine Finance, which is a relatively new and very interesting platform. So George, why don't you tell us a little bit about it?
Thank you. Yes, so YieldStreet is an online investment platform. On the one hand, we have retail investors that can log on to our tech platform within a few minutes. Once we put a investment opportunity online, we socialize it. We provide the prospectuses, and then we have a designated time. We said like next Tuesday at 4 p.m. Eastern time, this investment opens up for participation, and participation varies between say $10,000 and $20,000 or $30,000. On the other hand, we act like a private equity. So we have our own funds, and we fund an opportunity. So a ship owner wants to raise $20–30 million. We look at the opportunity. If we decide to go with it, we will fund it. And then a few weeks later, we will offer it to our retail investors. We see ourselves as opportunistic and money, so we are very quick. So for example, ship owners that want to buy their debt back from a private equity, we are able to give them the money very quickly so that they can go and buy this debt back and then refinance this with bank debt over a year or 6 months or 18 months. So we are in dry bulk. We've done some tankers, we've done some containers, and just to give you the growth, when we started in 2018 in May, we had $300 million of assets under management and about 50,000 investors. Today we have more than 250,000 investors and $1.2 billion of assets under management. We don't only do marine finance, we do art finance, we do real estate, bridge financing, and vendor financing.
Okay, great. So thank you for letting us know what you each do. I mean, as you can see, we have different types of platforms here who can give us all different sort of perspectives on alternative finance. And perhaps I think we should probably turn to you know, the main issue that we're all focusing on right now, which is this very recent and significant economic downturn that has been occurring mostly with respect to the novel coronavirus and how you know, the stock markets are obviously not doing particularly well and businesses are having to close or you know, we're working from home. And so I'd be curious to know what, you know, the panelists think about doing new deals or what the prospects are for new financings in these really pretty uncertain times. And so maybe we can start off with Ole. And as you mentioned, SFL is a publicly listed company. It's paid dividends every quarter since 2004. And I would imagine that SFL would like to kind of maintain that track record. And so I guess, you know, keeping that in mind, how do these kind of macro global events affect the decisions made at SFL? And is SFL interested in doing new financings at this time?
Well, yes. First and foremost, I would say that, you know, this is affecting us all. It's a very dramatic sort of time in the world economic history, probably. And we're all in the middle of it. Some see it sooner. Typically, for instance, our share price took a real turn, you know, a week or so ago, where we as a relatively liquid stock in the market, you know, wherever money investors were selling off whatever they could and wherever there was liquidity. So you see more volatility from that perspective, typically in liquid instruments. And just as an example, you know, week of March 18, you know, there was more than $35 billion of cash taken out of the investment grade market in the US alone. So there's been a huge flow of fund effectively moving away from risk where investors want to take it over, put it over in, I would say, cash and you know, call it and assets, where there is a smaller risk of anything sort of happening to it. So the same thing we see with the banks. The banks have had huge draws on revolving credits, where basically all large corporates have drawn down available lines wherever they could to you know, build robustness going into the storm. And as we are still in you know, based on what I read, we're still at relatively early stages in terms of the outspread of the pandemic. It will take some time until it cools down. I think in that period we will have to expect that financiers will be more cautious and certainly much more selective, I think, than in the past. I think, you know, strong companies, you know, strong brand names also in this industry will have good availability for capital. But I think there will be many who will struggle to find funding now near term. So smaller companies with refinancings coming up may have to turn elsewhere than the regular bank because the whole capital environment has changed. we, and I'm sure some of our fellow friends here on the panel, we are definitely open for business. We are looking at transactions. Of course, price and terms is changing, somewhat with the market, but I would say not as dramatic as we've seen in other sectors where we've seen a massive repricing of capital in the industry. I know that some of the others have more, I would say, have a slightly different types of capital backing it. We're listed. We use the bond market, we use the leasing market, and we use the bank market. But I think this is going to affect all these markets in a relatively short term. So our principal focus, of course, right now, first and foremost, we have many vessels. We have lots of seafarers on board our vessels. We are, of course, committed to make sure that they are safe, they are, comfortable in the situation. The vessels are running as they should. And then secondary, we of course focus on the whole financing environment and how we can best position us in the new setting. But it's dramatic for sure.
Yeah, I think that's right. That this situation is affecting everyone. And I guess my next question is for Robbert Jan. Direct ship finance offers potential borrowers kind of a loan application process through its online portal, and it seems that part of direct ship finance's offering is allowing borrowers to kind of tailor some of the loan terms to its own needs. And I guess the question is, have the terms that direct ship finance is kind of willing to accept or offer changed, considering these kind of uncertain economic times we're in? Or kind of piggybacking on what Ole said, is the types of customers that direct ship finance is willing to work with currently, changed at all or been limited?
No, basically not. I mean, obviously the shipping markets have been quite nervous over the last 2 quarters or so. That started with the US-China trade war, followed by the corona situation in China, including a prolonged Chinese New Year. Then, of course, we had the IMO 2020 transition from high sulfur to low sulfur that created some unrest, especially on the dry bulk side, I think. And then, of course, recently, the drop in oil prices. Looking at that, if you approach it optimistically, and that's what I always try to do, you may argue that all these events are temporarily. Whether that is true, to be honest, I don't know. Maybe I'm too optimistic, maybe I'm too naive in this respect, I don't know. We will have to see. But as I explained earlier, our underwriting methodology is based on a through-the-cycle approach, meaning that we can finance in a high market, but also in a low market. But obviously, we amend the financing structures to where we are in the cycle. That is basically the situation.
Understood. So George, a few months ago, I moderated an alternative finance panel at a Capital Link conference, and one of your colleagues was on the panel. And so we were able to kind of witness how quickly a YieldStreet offering can sell out. And so I guess my question to you is, have you seen any sort of increasing or decreasing interest in ship finance deals, maybe from a crowdfunding perspective?
Yeah, so as you said, the opportunities that the offerings that we put onto the platform get taken up very quickly. I don't know which one you saw, but it usually takes just under 20-30 seconds, and these offerings get absorbed. So we've since, you may have seen in the market, partnered with BlackRock to get bigger offerings onto the platform together with our offerings, and provide a mixed offering of debt and our offerings. And you talked about the situation now, and what we have seen is we've been getting phone calls and emails, communications in the last few weeks, where because we are situational funders, where owners see an opportunity and realize or understand that it'll take the bank a long time for them to give them a hunting license to be able to make that acquisition. So we are working with such owners that are looking at opportunities where they find a situation that is interesting to them.
Yeah, and I think that one, obviously alternative finance, there are multiple different types of products and services and platforms out there. It's a very kind of general term, but two themes that seem to kind of run across alternative finance platforms is flexibility and like George was saying, the ability to move relatively quickly, or at least usually more quickly than banks. And so I would imagine that alternative finance platforms could provide pretty good solutions in the short term, or maybe even the long term, for some ship owners that are in need of quick financing. And so Hans, has Solarcity been approached by ship owners in need of quick financing or refinancing? And if so, kind of how do you deal with those requests? Is that something that Solarcity is interested in doing right now?
Well, Amanda, actually we did, but this was before Christmas. We did a very quick deal where we did an all cash deal, so we can act quickly. Of course, now in the situation where now there are also logistical issues, which is like you cannot get anybody on board the ship to inspect, for instance. You can't send people around. You can't take over for a client. Can't go and buy a ship and put a new crew on because it simply doesn't work. But we as a fund, we have the capacity to do the transactions. So we were in discussions a couple of days ago with a client that may look at selling one of their ships to us, and we may have to see if we can find alternative solutions with regards to inspecting the ships and so forth. But one also has to take into account that the market out there now is bombed out, that it's difficult to have a view on where the market is going. So yes, there is a lot of caution. We have to be cautious, but we will certainly talk to our clients if they have a need.
Okay, so Nicolas, what advice would you give to a ship owner who's looking for kind of a really quick financing, quick turnaround, maybe even to keep their doors open? What are the kind of the pros and cons of entering into a transaction with an alternative, lender, keeping in mind that obviously most lenders, even alternative platforms, are being kind of cautious in these current circumstances?
Well, I think the landscape has certainly changed quite a lot in the last couple of weeks. We closed the transaction 2 days ago, and we do see that some of the Asian money is quite sticky. So some of our Japanese and Chinese sources are definitely open for business, albeit more selectively and cautiously. But in the past, I would have told most ship owners that were in need of a quick solution to talk to some of the larger listed players like SFL or Ocean Yield, etc. Because our experience in working with lessors like that is that they can always underwrite, they can always do transactions with cash and then back lever later on. I think that has changed a bit in recent weeks, because what we hear is that the traditional lenders are extremely cautious. And if you're I don't want to speak for Ole here, but okay, let's take the Ocean Yield example. If you're an Ocean Yield and you do a transaction and you fund it all cash, first of all, having a lot of cash on your balance sheet in these uncertain times is very valuable. So expending that in the transaction and being stuck with the transaction being fully cash or equity funded, not knowing when you can back lever the transaction is going to be an issue. So that leaves the capital providers, if we disregard the Asians, because they're usually very slow. You want to do a transaction in Japan or China, that's generally going to take between 2 and 6 months. So that's probably not the solution in the scenario you mentioned. That leaves the direct lenders, I would say, and most of those are, more opportunistic. A lot of those pockets come from credit funds and hedge funds, and the cost of that capital is usually fairly high. We're talking sort of L plus 600 and upwards, at least. So I think if you were in a hurry today and you needed to have certainty of financing, you have to expect to pay a very high cost. If you think about equity as an alternative, I think the cost of equity for a shipping company today is, just pick a number. It's very high. I don't know who could raise equity today except for companies that have a super solid balance sheet and maybe identify to proceeds that make sense. So, I would tell anyone that's in that situation, if you're in a rush, it's going to cost you. If you have, a couple of months to spare, let's say it's a refinancing and maturities 3-4 months down the line, we'll take you to Asia and we'll find you some cheaper capital. It'll take longer, but it'll be much cheaper than what's readily available out there.
Okay, thank you. Well, since we were talking about SFL, we might as well jump to Ole. And I guess the question that I would have is, we talk a lot about the funding gap that's been created since kind of traditional shipping banks have left the lending space. And I guess, does SFL kind of view that funding gap as an opportunity, or considering these kind of uncertain economic times, would that be something that maybe SFL or alternative finance lenders in general, instead of maybe rushing to fill that funding gap, maybe pulling back a little bit? So I guess the question is, do you see any opportunities in this current environment, or is it more of a wait and see approach?
Well, yeah, first of all, I don't think there is an issue with capital availability for the industry. It's really more a question, where is it coming from and what's the price of that capital? I think if you go back a few years, and certainly before the financial crisis, call it the shipping space specifically, was awash with, call it, lots of banks who were lending at super low margins, and we're betting on, that the volatility had stopped. That all changed, after the financial crisis in 2008, 2009. And also with the new capital rules, particularly in Europe, the new Basel rules, Basel III, Basel IV, it has also triggered a change in where the capital is coming from. As Nicolas pointed out, there's been a lot of capital coming into our little industry from Asia, both particularly China and Japan. And we and several others have financed, and have raised a lot of capital in those markets over the last few years. I believe, European banks have roughly half their portfolio compared to where they were just a few years ago, but the money has come from other places. And but that capital may be a little more expensive than they have been used to. I think that's really more a question of, do those investors who put the money in, if it's a bank or a private equity or who it is, do they really understand the volatility that ship owners expose themselves to? Because if there is one thing that's really, illustrating shipping or presenting ship, it's leverage. Typically, shipping companies, they have high operational leverage, and with that I mean they run their vessels in the spot market. You don't know necessarily from day to day what the charter rate will be. You may look in the mirror and say, well, it's been relatively stable, but of course something could happen and it could go to zero. If you then have high financial leverage, or you have high lease, payments due, you will end up in a liquidity squeeze sooner perhaps than you thought. And that is of course important to understand, that the reason why shipping companies go bust from time to time is liquidity, and availability of capital is there definitely.
Okay, thank you for that. So Robbert, Jan, what do you think? Do you kind of subscribe to this funding gap philosophy, or do you think, well, no, the liquidity is there, it just may be a little bit more expensive? Do you think that alternative finance providers will continue to be interested in providing a lot of capital to the shipping industry? Or again, if they don't, what does that mean for the shipping industry?
I think there will be a continued interest from alternative lenders for ship finance. I fully agree with a lot of the things that Ole said. I think that also today's situation doesn't fundamentally change the demand for alternative lending. I mean, the alternative lending or the demand for alternative lending is not created by the situation where we are in today. It is something that has developed over the years with the traditional shipping banks, primarily in Europe, retreating from ship finance. Some of the banks exited. Some of the banks are actively reducing their exposure, and that leaves, of course, a void, and that void will be partly compensated by alternative lenders, but I think it will be at the end of the day a combination of factors. It will be in certain situations more equity contributions from owners, a more conservative approach. You will have for sure the new providers of finance in the Far East, in China, in Japan, the leasing houses, the trading houses, and you have a large variety of alternative lenders. YieldStreet, I think, is a very good example, and direct ship finance is a very good example. And I think we may be a little bit more expensive than, let's say, the traditional bank financing, but we also offer far more tailor-made solutions. I don't know exactly what the pricing level is of YieldStreet, for example, but they are for sure a lot more expensive than we are. But at the same time, we have a slightly different product. But that, I think, is very interesting for a lot of owners, not to focus only on the pricing element, but also focus on the additional parameters of the different financing solutions. And I think there's a lot to be gained from the owner side in that respect.
Okay, thank you. So I guess switching gears a little bit and kind of relating to these global and macro questions that we've been discussing, ESG has become an increasingly prevalent topic, especially with respect to the shipping industry and ship finance deals. There's the Getting to Zero Coalition, the Poseidon Principles, and that's just a couple of these ESG initiatives that have come out recently. And so I guess maybe I can throw this one to George, since we just mentioned YieldStreet. Has YieldStreet Marine been addressing the types of shipping deals that it does, or the customers that it's working with from an ESG perspective? Is there any sort of pressure from potential investors in regard to ESG matters?
Shipping is a traditionally slow mover. It was the last to come into technology, one of the last to have these environmental laws come in. But and it takes a lot to change things from one day to the other. It doesn't happen. So you need different fuels, you need different ship designs, the shipyards need to source the engines, the engine manufacturers need to be able to produce those engines. So shipping will get there. I think any lender that thinks that they can impose some kind of change onto the shipping industry through its lending is mistaken. Many years ago, I was part of a working group that A&B Ambro was on, and we were going to negotiate a better charter rate between the charterer and the ship owner if they were going to retrofit their vessels. This never worked. So I think shipping is doing a lot to change. It just takes time to get there.
Okay, thank you. Hans, so when you are assessing a new financing opportunity, how important is your counterparty's commitment to sustainability and crew care, corporate governance, things of that nature? Or is it really just to see, about, how well the company kind of can perform from a financial perspective?
ESG is very important to us, and we have to deal with this, of course, with our investors, our bankers, and our counterparties. And I think that we've seen in the last 6 months documentation, when doing documentation, either it be a bareboat charter party or a loan document, and they usually go hand in hand. You have to have all parties around the table and get, let's say, the Poseidon principles into the documents that you do, because this, of course, also is required by some of the lenders. So it's definitely something that is on the agenda. It is something that we have in our charter parties. It's something that we follow up with our clients on a quarterly basis. I think it will be key, and it is key, and it will be key in the future. To do sound business in the maritime industry.
So Ole, obviously as a public company, SFL has some unique pressures with respect to keeping its shareholders happy. Have you been experiencing any increasing pressure from current investors or potential investors with respect to your platform as far as financing more kind of ESG committed borrowers?
Well, ESG is important for us as everybody else. We have our head office located in Europe. I think Europe has been, call it a little quicker on the adaptation on ESG measures than maybe some in the US. So that we have an ESG report available on our website. So we focus on this. We typically deal with larger counterparties. We have Maersk as a large counterparty. We have Phillips 66 and others. So this goes really to the heart of what we do. Also, in terms of ship developments, we're very focused on that. We look at new technology. We look at upgrading existing vessels. So we spend a lot of time on this. At the same time, a ship, after all, you have to push a lot of mass through water, through a lot of resistance. So it's not like you can just put Tesla type batteries on board a vessel and off you go. Analysts say that if you use Tesla type batteries for a Capesize bulker from Brazil to China, for instance, it will be 90% the batteries and 10% the cargo. So we're quite far away technology wise until we are super green. But at the same time, it's a very cheap and energy efficient way to move raw material. So I think compared to many other transportation modes, shipping has always been a relatively efficient and way to move goods, also from an environment perspective.
Okay, great. Well, I think we're almost running out of time, so I want to give the last question, I guess, to Nicolas and ask, and this is a tough question to answer, but kind of what is your outlook for 2020 for ship financing deals? Will we see more of them, less of them, different types of them? Well, obviously these are a bit uncertain times, but to the best of your ability, what are your predictions for 2020?
Well, I think there are two things that characterize at least the alternative capital side of ship financing. I think it's diversity and fragmentation. By now this product has grown so big with so many players across the globe that have different types of funding sources, that have different focus areas, not only in terms of segments or asset types, but also structures, etc. that I really think that there's something out there for most companies, meaning that, you know, whether you're a tier one, in relative terms, large cap listed shipping company, there are no super large cap listed shipping companies, but you know what I mean, or if you're a private ship owner that owns 10 ships, there will be a solution in, or there should be a space in your toolbox for alternative financing. You know, as an example, we've done financings for Starbulk in the Japanese market. They're the largest listed dry cargo owner. And we've also done deals for extremely small European ship owners with 4 ships on their fleet list. And I think that we will see that this product will take more and more space as the banks continue to pull back. I think that this credit arbitrage that has been extremely good for companies like SFL, Ocean Yield, and other players that have access to that cheap back leverage, you know, it's going to be very interesting to see how that plays out. If that credit arbitrage continues, I think companies like that will have extremely bright times ahead of them. If not, I think ship owners looking at alternative capital will just have to start getting used to capital getting substantially more expensive. So I think there will be deals, but I think cost of debt is certainly going up in 2020.
Okay, well, I've been told that our time is up. I'd like to thank all of our panelists for joining us. Thank you so much. And I hope this has been informative to all of our viewers. Thank you.
Thank you very much.
Thank you.
Thank you. Thank you.
Thank you, Arne.